All right, let's get practicing in QuickBooks Online. Grab the link below in the description so that you can follow along. All right, here we are in the QBO Gym. And the QBO Gym is a place where we have numerous exercises that simulate real life scenarios that you may encounter as a bookkeeper. Every single month, we come out with new exercises for you to practice your skills, and we break it down for you into 4 different sections. So today we are going to be working in the October warm-ups section. At the top here is a little video that gives you a little synopsis of what you will be doing for Craig. He is our fictitious business owner. Further down is an interactive quiz to test your knowledge. And at the bottom here are all of the exercises within this section. So today we are going to practice recording expenses. You will need to be in the same session of the sample company that you were in for the previous exercises. If you have not completed those yet, go ahead and click on the link on the top right corner of the screen. That will take you to the first exercise. Complete that one and all the ones following it until you get back to this one. They each build on themselves, so it's really important you start with that first one. So our scenario today is the stump grinder's motor started leaking oil and was producing white smoke while they were using it for a job site about a week ago. Craig took it to Tommy Chin, who was able to repair it quickly and was even willing to deliver it. Tommy charges a service fee of credit cards, so Craig pays Chin's gas and oil with a check. He left you the details along with a receipt from Hicks Hardware, a note about his visit to Squeaky Clean Car Wash, and a note about an old receipt from Tanya's nursery. So we need to get a list of these expenses, which can be found in the under the animated video in this section. So let's go back and grab that. Here I am back in the gym. If I scroll back up to the top here is that animated video. Just below that is this receipts button. Go ahead and click on that. It will download for you, open it up, and you will see these 4 notes appear. This is the old one from Tanya's that he talked about, that receipt from Hicks Hardware, a note about the check that he paid for Chin's gas and oil, and then over here a little note about Squeaky Clean Car Wash, which we'll address a little bit later. So let's go back to the exercise, and we'll first start with Chin's gas and oil. So Craig wrote check 70 on the receipt, as you can see right here. He wrote that on the receipt from Chin's Gas and Oil, so you assume that he wants you to prepare a check for when Tommy Chin delivers the stump grinder. So let's see how we would do that. There are multiple ways to record a check to pay a vendor in QBO. If you are using QBO to print the check, you'll want to select the check option in the plus new button. If you have handwritten the check, you can always just use a standard expense transaction. In this case, we need to print off the check from for Chin's Gas and Oil to give it to them when they deliver the stump grinder. So we'll use the check transaction. To do that, we need to click on the plus new button and then select check. So here I am in the sample company. I am on the last page that I left off of from the previous exercise. And if you did those previous exercises as well, you should be on this page as well. So we are going to start that check by clicking on the plus new button up here under vendors, select check. And you will see the check transaction appear for you. So let's go ahead and fill it out. Under the payee, it is Chin's Gas and Oil, so we'll put that. Click into it. You can either scroll or type in. I happen to see that Chin's Gas and Oil is right here since they're close to the top alphabetically, so go ahead and click on that. We need to make sure that the bank account says checking, which it does for me here. If it doesn't, you just click on the arrow and you select the bank account there. The check number is check number 70. That is what is written right here in the note. So we need to change that right here. Let's change that to 70. If you hit the tab key, you will see that check number 70 has been adjusted now to check number 70. Payment date, we're just going to leave as is for today. In real life, whenever that check is being written or printed, that is when you would want to have that date. In the category field, it is a maintenance and repair equipment repairs. So let's go ahead and put that in the category. Right now it says maintenance and repair, but we need to get a little more specific and put equipment repair. So click into it 2 times. If you scroll down just a tiny bit, you will see there is one that says equipment repairs. It's the sub account of this maintenance and repair. Go ahead and click on that, and now it has been selected properly. We're going to put a description in here to give a little more detail about what's going on, what this is for. So it's going to be stump grinder motor repair. So go ahead and type that in the description. Stump grinder motor repair. Stump grinder motor repair. Great. And the amount for this is $185. If you go back to that note here, you can see that it's for $185. So that is the amount that we want, which just happens to be there already for us. So we are good. And all we have to do now is save and close. So click on the green Save and Close button down here on the right-hand side. And you will get this little pop-up, and this is QBO giving you a warning that says a check with a number with number 70 already exists. Do you want to save it anyways? This means that there was already a check, or at least the check number 70 was used for another check. So we need to investigate a little bit more to see what's going on with this. We don't want to save it, so let's go ahead and click on No. That is the white button right here. Click on No. And you're still in the check transaction. And that is because QBO is giving us the opportunity to change the check number. However, since we're not really sure the number is correct, I mean, that's what Craig had written on the receipt, but we're not 100% sure. So we're going to exit without saving. So to do this, we're just going to click on the X on the upper right-hand corner of the transaction to exit it. And then when it asks you if you want to leave without saving, we want to say yes. So up here, click on the X, and then it says, do you want to leave without saving? Yes, we do. All right, so now we got to go investigate and see a little bit more of what's going on. We need to find that current check number 70. There's several ways that you can do this, so I'm just going to show you one way that you could. We're going to, in the left nav bar, hover over expenses and then select vendors. So hover over expenses right here and then click on vendors. And you will see the list of vendors appear for you. We need to look for chin and gas oil because maybe Craig meant that he had already written check number 70. So let's take a look at the transactions. Click on chin's gas and oil. If you scroll down a little bit, you should see it close to the top. Just go ahead and click on their name. And you will see their vendor profile with all of their transactions right here below it. So if we take a quick look, you will see that there is already a check 70 created for maintenance and repair in the amount of $185, which is great. So it seems that Craig has already entered it, so we don't need to create a new one. Perhaps we should have clarified that before jumping to the conclusion that Craig wanted us to write it. QBO won't always be able to catch duplicate transactions on its own. If we had typed a different check number, we may not have caught that error correctly. So just a quick reminder here, when you are working with clients in real life, you may, if you get some notes that you are not 100% sure what they are for, always clarify with your client so that you don't have any kind of errors, and then you don't have to do double the amount of work of something that may have already happened. So I'm going to go into this vendors. You're going to see here is that list of transactions, and there is that check number 70 for $185. So we know that that one has been completed, and now we can move on. So let's look at the one for Hicks Hardware. Craig purchased a water hose at Hicks Hardware for the business, but on the same receipt, he also bought a box of light bulbs for personal home use. The water hose is a connector for 2 of the fountains for Sunshine Family Store, making it billable to that customer. This transaction will need to be split to record each item purchased accurately. Because Craig is a sole proprietor of his business and because he used company funds for his personal light bulbs, this purchase is considered a withdrawal from the company by the owner. Even though it is a small amount, it still has to be recorded so that it doesn't show up in the profit and loss statement in the company. This isn't an expense, but it will reduce the value of the company's assets. So essentially, the owner is taking money out of the company when he bought these personal light bulbs. Because it affects the company's assets, you see the owner withdrawals on the balance sheet, not the profit and loss. So you make a mental note to remind Craig about the risks of mixing his business and his personal accounts together, because you really, really, really want to try to keep it separate as much as possible. It just makes your books so much cleaner. But let's see how we would record this purchase. So step one here, in order to withdraw or to track Craig's withdrawals, we need to make sure that there is an equity account set up for it. If not, we need to create one. There should be equity accounts to track the value of Craig's contributions as well as his withdrawals, but for the purposes of this exercise, we're only going to be looking at the ones for his withdrawals. So to check and see if we have one for him already, we need to go to the chart of accounts by clicking on Accountant Tools and then select Chart of Accounts. So Accountant Tools is right here at the top. Click on that, and then you will see under Quick Links, you will see this chart of accounts. Go ahead and click on that. And you will see all the ones that Craig currently has set up there. Sorting the chart of accounts by account type allows you to see if there are any, if there is already an equity account created to track Craig's owner withdrawals. This will help ensure that we don't set up duplicate accounts. So let's go ahead and sort it by just clicking on account type, which is right here. If you click on that, you will see that it is sorting it. Here's other expense, other income expenses, all the way down. Keep scrolling. Cost of goods, income. Oh, and here we go. We have two equity accounts, one that is retained earnings and one that is opening balance equity. So the first one there or the second one that I had said, the opening balance equity, which is the initial amount of the money that the business had the day of the account was opened. That is what that one is for. Retained earnings tracks the historical profits of the company. So again, that is not one that we want to use either. Neither of those are going to work. So because neither reflects the withdrawal of money from the company by the owner. So we need to create a new account. So to do that, we need to click on the not the plus new button. We need to click on the green new button on the top right corner of the screen. You'll need to scroll all the way back up to get to it. There it is. Click on the new button and you will see this card appear so that we can go ahead and start filling it out. Once again, this is going to be an equity account. So that is the type that we are going to choose at the top. Up here, you see equity. It's the very last one. It looks like it's got like a little hand with it. Go ahead and click on that. I think that's a hand. Go ahead and click on that one because that is the type of account we want. We are going to save this under equity. So click into here. We're going to select equity so that it is a sub account of that. The tax form section is going to be owner's equity. Now, the purpose of this field is to map to software used by the accountant, which map means matching things up a little bit easier. If you are not in communication with Craig's accountant, owner's equity is a good choice, but they may suggest a new one, different one later. It can always be adjusted. But for right now, we're just going to go ahead and select owner's equity. So click into it and you will see owner's equity down here. Click on that. The account name, we are going to name it as owner's draw. So go ahead in the account name, click into it, and then type owner's draw. And that is right there. The description field we're going to leave blank. Now you have the option to use this field to enter a description or keywords of your choosing if you want the remainder of something particular, if you want a reminder of something particular of this account. It really just gives like a little bit of an extra description of what this account is being used for. It's not a required field, so you can always leave it blank. But if your account name is pretty self-explanatory, like ours, owner's draw, it's really not necessary to have the description, but it is there for you as an option in real life. We're going to leave the starting date and opening balance blank as well. As we learned in the previous petty cash exercise, the previous one from this, when we enter Craig's first withdraw, it will create an opening balance and a start date from that transaction. So for this, we're just going to go ahead and leave it blank. So we're all done filling this out. All we need to do is click save. And here is that description box right there. Here's where you would enter a starting date and opening balance if you happen to have one. So we're leaving it blank. We're leaving a description blank. All we got to do is just click save. And that has now been saved for us. If I scroll down, I don't remember if it's all the way at the bottom still. Yep, all the way at the bottom, you will see owner's draw is right there. There is no opening balance, but it has been created for us. So now let's see how this reflected in the expense transaction. We're going to click on the plus new button and then select expense. So at the top here, click on plus new, under vendors, select expense, and you will see the expense transaction form appear. Let's go ahead and fill it out. Now under the payee, this is for Hicks Hardware, so that's what we want to select. So click in payee, type in Hicks Hardware, there we go. The pay account is going to be Visa because if we look back at the receipt, you will see that it says paid Visa. That is how he paid for the items. So you click on the arrow, you can see Visa is quite close here to the top. Go ahead and click on that. In the job category, we're going to select job expenses, job materials, sprinklers, and drip systems. Because this is something purchased as part of a special project and it isn't an item that is normally kept in stock to sell, we're going to list it under the category section and not the item details. If it was being tracked as inventory, then we would put it there. Note that this category may be listed because it was the last one used by this payee. So let's take a look and see if it is. And sure enough, there it is, job expenses, job materials, sprinklers, and drip systems. So we don't have to do anything there. In the description field, let's go ahead and put it as 20-foot water hose. So click into it and you can start typing in 20-foot water hose. And that has been added. It's always nice to have a little bit of an extra description about what it's for. My personal feeling is that it never hurts to overdo it with your communication, with your paper trails, with your explanations, anything that you can for yourself. Just so when you're looking at a transaction of any kind, you know exactly what it's for. So let's keep going on. The amount field is going to be $18.47 for that 20-foot hose. Let's do that. What did I just say it was? I forgot already. $18.47. Type that in the amount. If I hit the tab key over, you see that QBO has made that adjustment for me. Now this is going to be billable. If you remember in the description, we talked about how this is used for I believe their fountains. So we're going to be passing on that cost to them. So it's billable to Sunshine Family Store. So let's check on the box under billable so that it is showing that it is billable to the customer that we select, which is Sunshine Family Store. There it is. And now we need to record the personal portion of the expense. So in the category field, again, we're going to, on that second line, we're going to select owner's draw. So on the second line here, click into it 2 times. If you start typing in owners or owner, there it is, owner's draw right there. Click on that. In the description field, we're going to put owner purchased 1 box of light bulbs for personal use. Note that it is always best practice to avoid using complicated abbreviations or item numbers without a worded description of what an item was or what the amount was for. Use a description that you will immediately be able to understand what the purchase was for if you are questioned about it 2 years from now. Again, like I mentioned before, like having that description is always super helpful and useful. It makes your life so much easier if you have to refer back to it. So in the description field, again, owner purchased 1 box of light bulbs for personal use. Let's see if I remember that. Owner purchased 1 box of light bulbs for personal use. Owner purchased 1 box of light bulbs for personal use. All right, great. And then we need to put the amount, which if you see here is $5.91. So put that in the amount, $5.91, oops, not 5,000, $5.91. If you hit the tab key over, you will see that QBO has adjusted the total amount, adding these two together, which is great because it also says the total is $24.38. So now all we need to do is just save and close this receipt. So down here on the bottom right-hand corner, click on the green Save and Close button. And now that expense has been saved. So there was a lot going on for just this little transaction, but recording it in this way, you've properly recorded the business expense in it to its correct category, while also ensuring that personal purchase is tracked as an owner's draw in an equity account or equity transaction. This maintains the integrity of Craig's business's financial records. Now that we have everything recorded, let's go back and take a look at the chart of accounts to see how Craig's personal purchase affected the owner's draw account. So to do that, we need to go into the chart of accounts page. You would click on Accountant Tools and select Chart of Accounts. We are already there. If for whatever reason you navigate away from it, you just click on this Accountant Tools and you go right back to that chart of accounts, and this will pull back up for you. Let's go ahead and sort the accounts by name or account type, or we can simply scroll down to see where owner's draw is. So I think mine is still, yes, it is still sorted the same way that I had before. So equity is down towards the bottom here. And here is owner's draw. And if you look and you see a negative $5.91, that is the purchase of the light bulbs. That is because that is the amount of money from the business that Craig took out of the business for his personal use. So this amount will continue to increase in a negative direction whenever Craig takes money out of the business. If you use the same account for owner's contributions, it would be the money would go up. It would go in a positive way. So these changes are reflected on the balance sheet. As a side note, I would recommend having one separate for owner's draw and one separate for owner contributions, just because it's a little bit easier to see on the balance sheet line item. I just think it's a little bit cleaner. So that's my personal preference, but you could technically use the same account for both owner's draw and owner's contributions. All right, so let's move on. So Craig's first rule of petty cash purchases was that all receipts had to be turned in. And Craig's second rule of petty cash purchases was to not break rule number one. So Craig, as he predicted, the card reader was broken when he went to go wash the truck at Squeaky Clean Car Wash, so he had to use petty cash. But he forgot to grab a receipt out of the machine. By the time he remembered and tried to double back for it, another car had already pulled through, and Craig's receipt was nowhere to be found. Since he didn't have a receipt, he just left you a note with the total, which is what this note is right here. $19.99 petty cash for the car wash. So let's see how we would record this. Using petty cash without getting a receipt is not ideal because it's harder to justify a purchase without any kind of documentation. However, situations may arise like this where a receipt may be lost or just not provided. Even without a receipt, you still need to ensure that every transaction gets recorded into the petty cash account and is reconciled regularly. So we need to click on the plus new button and then select expense. So click on the plus new button here under vendors, select expense, and you will see the expense form appear. So let's go ahead and fill it out. In the payee, it is Squeaky Clean Car Wash. So we're going to click into it and start typing in Squeaky. There it is. The payment account is that petty cash account. So let's go into that. Click on the arrow here, select petty cash. And that has been updated. You see that balance of $150 that we had done in the previous exercise. So in the category field, we're going to select automobile as the expense. So click into it 2 times, and you will see actually that automobile is right here close to the top. So click on that. In the description field, we're going to call it truck wash. So, oops, truck wash. the amount is going to be $19.99. So click into the amount box, $19.99. If you hit the tab key over, you will see that the total has been captured by QBO, which is great. And then all we need to do is just save and close. So click on the green Save and Close button, and you will see that that expense has now been saved for you. Now, do you remember that what you and Greg agreed to do if any money was spent out of the petty cash fund? It was to replenish it. He wants you to write a check to replace the funds. You will want to do that as well as do a tally to make sure that the total is correct. Like, for instance, did Craig return his penny in change? And then reconcile it to just like any other bank account. So we'll see how to do this later on in the cool down section for October. But let's move on. We have one last receipt here. Craig left you an old receipt from Tanya's nursery and said that he went ahead and entered it. But for the purposes of this exercise, let's just go ahead and duplicate what he did. So we're going to click on the plus new button and select expense. That's again up here on the left-hand side, click on plus new. And then under vendors, select expense. And you will see the expense form appear. The payee field, we should put it as Tanya's nursery. So click into it and type in Tanya. There you go. The payment amount, we need to have it say checking, which it does here, which is great. In the payment date field, and we're going to click on the calendar icon, and then we're going to hit it 2 months prior, and then select the date. So if there was a date here, it just says 60 days ago. That's why we're doing it 2 months prior. But whatever the date would be on here in real life, that's the one that you would want to put. But for the purposes of today, because the sample company is always changing dates, and when you're doing this is going to be different than what you see on my screen right here, we're going to click on the calendar icon and then hit 2 months over. For me, today is October 18th, so I'm going to select August 18th. Whatever your 2 months prior on that date is, you would select that one for that field. In the category details grid, we're going to select job expenses, job materials, plants, and soil. So it's already selecting as job expenses. If you click into it 2 times, you will click into it and see, what did I say it was? Job, material, plants, and soil. That's it. Okay, so we're here at job expenses and then a sub account of job materials, and then the sub account of that one, plants and soil. So click on that one, and that has been properly captured. The amount for this was $108.09. So let's go ahead and put that in here. 108.09. And then we are simply going to save and close this. So go ahead and click on the green Save and Close button. And that expense has been saved. And there you go, that you have now recorded several different kinds of expenses. And if you have any questions or want to know more about the QBO Gym, just go ahead and click on the link below in the description. Be sure to leave this session of the sample company open, as you will need it for the next exercise in the warm-up section, where we practice processing the bank fee transactions. And I will see you in the next video.